Last week was all about modified endowment contracts and what that means to high cash value life insurance policies. This week, we're talking infinite banking. We're going to go beyond the hype. How does the Be Your Own Banker strategy work, and what do you need to know about it? This is, after all, the Life Insurance Financial Education Podcast, where we're pulling back the curtain on high cash value life insurance and how it can help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
And my name is Carlo Viqueira with Net Wealth Finance.
All right, infinite banking. It's all the hype in the whole life space, the high cash value whole life space especially. And many people also utilize it in the IUL space. Where did this infinite banking thing come about?
There was a guy named Nelson Nash. Nelson Nash wrote a book called Becoming Your Own Banker. And it's actually a really good book. It's a short read. There's a lot of concepts in it. Some of the numbers might be a little bit dated, but really he walks through this strategy that has been utilized for really decades by some folks, but not super well known. And there's a lot of examples in popular culture, like Walt Disney and how he funded some of the parks and stuff. But the concept is laid out in pretty good detail of funding something like a whole life insurance policy and using that as your line of credit and your financing for what you might use a bank in normal terms to finance things.
So Nelson Nash, the godfather of infinite banking, brought about this concept. A lot of people took it and ran with it, and it's got this machine behind it now where you can become a certified Be Your Own Banker specialist or something like that. Is this all hype, or is there legit numbers to this thing? Can this actually work?
I think there is a lot of hype in this space. There are people who will say a lot of things, but the reality is that it is a really great concept that is effective if done properly. And that's kind of what we focus on this podcast. And I think whole life insurance and IUL. Now, most of the folks in the infinite banking space say you can't do this with IUL. They have their various reasons why they say that. But whole life is a great tool for this. And I think IUL is a great tool. And it's not just hype. I think we are practitioners ourselves. I use my own policies for business funding to do investing. I might purchase stocks or various business investing aspects or real estate. So a lot of us use this as a great tool to lock in compound interest gains. That's the main thing that I like to think about this is when you kind of have this savings vehicle like whole life insurance or an IUL, you can default to savings and you never lose access to that liquidity so that you can do whatever it is you need to do in your life.
Yeah, there is a lot of controversy around what product somebody should have in order to practice infinite banking. The reality is infinite banking is not a product. It is a concept, and it can be done with all kinds of different vehicles out there, some that cost money and some that don't cost money. I go over this explicitly in one of my Infinite Banking Explained videos, where you could become your own bank by taking your money and putting it under your bed. And then every time you need money, you just go to your bank, which is under your bed. You just go to it and you borrow from it. And if you want that to earn interest, you pay yourself back interest as you put it back in there, right? That's a perfectly valid way to be your own bank. You can do the same thing in a checking account or savings account or maybe a brokerage account. But there are risks involved that we don't see when we utilize life insurance as the tool, the main underlying tool to be your own bank. So if you're just using under your bed, you run the risk of a fire, burning up all of your savings. You could get robbed. Like, there are definite risks that go away when you get that money into an institution. So let's say you put that money into a bank. Well, now you run the risk that the bank goes insolvent, or the bank is charging you fees, or they're not really giving you any type of a return. It's safer, but it's only insured up to a certain dollar amount. We don't have, massive guarantees around that. So there's trade-offs with each of these products. And it just so happens that when we utilize high cash value life insurance, whether it's whole life or IUL, we have this really safe product that's stored with a massive entity in a life insurance company that's been around for over a century generally. And they have excellent credit guarantees. They have really good products. And we're contractually guaranteed to have access to our funds at a very, very high amount and at a generally low rate. Like, that's amazing. And everything that we get from that leads us to advocate for doing infinite banking with these particular products, whole life and IUL.
Yes, and I think because of the security of both whole life and IUL, we have access to generally high 90% of the cash value that we have in our policy that we can borrow against. And what I have videos on this where I compare to what I think is maybe most similar. And that's something that might be called an S block or securities-based line of credit, where you have your brokerage account and you borrow against it. Now, most cases, even if you're in really secure index funds, these brokerages may give you 50, maybe 60% asset value, but you also run the risk of some kind of margin call. You have to maintain that percentage. So if there's a big crash in the market where it takes a haircut of 30%, you might need to come out of pocket to cover that difference or be forced to sell. And that can have big tax consequences. And there's various implications of that. And so I think that's one of the main reasons why we advocate for using this concept with life insurance. It can be a great mechanism that also has the added benefit of a death benefit. So I think there's also, on top of that, some of these living benefit riders that carriers have. These are unmatched in really any other product. So I think there's a lot of value with life insurance, specifically properly designed high cash value life insurance.
So I think we've established that the best thing to do infinite banking with is a life insurance product, either whole life or IUL. But how does infinite banking itself work?
Okay, so there is an initial capitalization period where we're funding a whole life policy or an IUL and putting funds into it. But we can pretty much immediately borrow against that policy. Let's say we wanted to fund a business opportunity and we borrowed against that policy. We might take a loan for 5% from the policy to purchase inventory for our business, and we can make those payments back to our life insurance rather than to a bank where we might have secured some kind of personal line of credit or a HELOC. We can instead make those payments to our life insurance company in order to pay down the interest and the principal on our loans.
Yeah, so let's simplify that just a little bit. Be your own bank means we're going to store our money somewhere. We're advocating for whole life or IUL. We're going to store our money somewhere, and at some point we're going to deploy it when we need cash. And generally we're going to do this for income producing assets or growing our business, something that's beneficial. Like if we're going to be a bank, we're going to lend money for good reasons. Being a good banker, we're not just going to lend money for anything. We're not going to spend money on frivolous items. So if we're taking on the task of becoming our own banker, we're going to lend some of that money that we've stored for future investments so that we can continue to grow our wealth. And then those investments, as they pay off, are going to pay back the loans that we've taken from the policy. So we've essentially taken over the banking function by choosing to save money off to the side somewhere that we could then access. And this is like a key that is missing for so many people out there. The average American has less than $1,000 in savings. They're not prepared to be their own banker. So they're going to spend time and time again, decade over decade, to somebody else being their bank. And all of that money leaks away from their finances and away from their portfolio into the pockets of others. So Nelson Nash and all of the infinite banking practitioners, we advocate for bringing that in-house. We want to take advantage of that. And if we take the time to capitalize it, we can do that.
Yes, and that's where the real power is. When we capitalize these policies, we're starting to lock in that compound interest, and it's growing. And we don't have to take opportunities right away. And having that, when we borrow against our policy, there is interest involved. So just as James said, we don't want to do frivolous things with that. And the goal is to buy cash flowing assets or invest in cash flowing assets. I have some videos on my channel around the BRRRR strategy of real estate investment. And I think this is a really good tool for that strategy, where you buy a place, fix it up, rent it out, cash out refi, and repeat that process. Because that cash out refi, you can put in a long-term mortgage in place and pay off the loan to your life insurance and start this process over again. And it's that infinite concept, because you can infinitely reuse those same funds over and over. And because we don't have any kind of limits, the limit is our cash value inside of the policy. When we build up hundreds of thousands or millions of dollars in our life insurance policy, we can cash buy and cut out hard money lenders that might charge 2% right off the top. And when you can cut out that, you are saving those dollars. Those dollars are staying in your pocket. And that's where this type of product, well, specifically the infinite banking concept with permanent life insurance, high cash value life insurance, is a fantastic tool.
Yeah, so for a lot of real estate investors, their go-to when they need cash is hard money lenders. And they're going to charge you a high interest rate and points to go along with that. And if you need a short-term loan to do a rehab, you need a loan for 6 months, you're going to pay 2 points and 10 or 12% or more to this hard money lender. Well, instead of doing that, if you capitalize properly, then you have that money on the sidelines. You can be your own bank in that scenario and save on all those fees. So it does require a mindset where you have to shift these funds ahead of time and prepare and get ready to be your own banker. It doesn't happen overnight.
Yeah, and that's exactly it. The infinite banking concept and these strategies, these life insurance policies, it's a game for life. It is. We are paying and funding these policies for many years. My intention is to fund as long as it makes sense. And this will become generational wealth for my family, but I will have a very large line of credit that I can use to execute on whatever opportunities arise.
Yeah, due to the nature of these policies, they're going to stick around until we die, or whoever is the insured person on these policies. They're going to be around until they die. So we have the opportunity to use them over and over and over again, just like a line of credit that's locked in at a nice low interest rate that we can continue to use throughout our life and then pass on that generational wealth. And hopefully we've educated the future generations that inherit this wealth so that they can continue to do it as well. It's just a cycle that never ends and continues to grow and compound your wealth and your next generation's wealth over and over again. So while the infinite banking space, there is a lot of hype out there. You got to watch out when you go and you listen to people and it just sounds like marketing after marketing and hype, and this is going to solve all of your problems. It's not magic. What's happening here is not magic. You're just laying out a process that gets you on the path to financial success and generational wealth by choosing to save enough money ahead of time or over the course of years so that you can take on the banking function instead of outsourcing it. Now, you may end up in a situation where you do so much business or your plans are so large that you can be your own bank for some of what you're doing, and you still need to take on other sources in order to do as much investing as you're trying to do. But at the heart of it, you're still becoming your own banker at whatever level you're comfortable with. And it doesn't have to be very big, but it can be. Some people have very small policies, and some people have a very small bank that they decide to grow. And some people have very, very, very large banks that they want to do. And it's really a personal decision how big you want to make your personal bank. What do you run into, Carlo, with the size that people want to build their bank or why they want to do a certain size?
I think one of the big things tends to be if they're trying to just supplement their savings. So the folks that I run into, I think you run into probably some larger scenarios, but mostly people who are funding, a few $1,000s a year. And this can be a really great savings vehicle for those kinds of people. And they're the people who are saying, oh, this is only for the ultra wealthy. Well, it's really not. This is a great tool for people who are kind of just getting started with savings in general. And so I think there's all kinds of scenarios that are out there, and a lot of people like to get started with something small. And then once they discover how great this is, they tend to want to come back and fund at a higher level. So I think it's really runs the whole spectrum. But personally, I fund very high, and I think that's the way that I prefer to use it as part of one of my biggest savings vehicles. But many people, it's a small portion, and it's a small portion of their overall portfolio, and they're still using normal retirement accounts as I do. So I think all kinds of people out there.
Yeah, and me personally, I view these policies as if I own one, I want to take the most advantage of it the government will allow. And we're going to max fund that thing and get as much money into it because it's tax advantaged. And whatever money I don't end up using will end up getting passed on to my heirs whenever I pass away. And we don't know when that's going to be. So once I get my money inside there, it's safe, it's compounding for the rest of my life, and it's still accessible at a very, very large percentage. So I'm going to max fund it. Separate from that, if I need cash, I know I always have a place where I've stored it, and I can go to it and borrow at a very small, consistent interest rate, typically around 5%. Many of my policies, like that's the most they're going to charge. And I know I'll never have to pay more than 5% if I want to access that particular line of credit. So it's incredible to know, and it kind of frees up what I do with my money when I know that the very first place it goes is my life insurance policies. And I'm building that bank. And then when I have things I need to do, when I have investments I want to make, I know exactly where I'm going to go to get it as my first choice.
Absolutely. And I think that's really what this strategy is about. Is oftentimes in myself, I will funnel money through my life insurance and maybe then still bring it back out to traditional investments, depending on various things. So I think the first place where the majority of my savings is going through is my life insurance.
All right. I think that about wraps it up for this topic. I don't think that the infinite banking concept is all hype. And it sounds like you don't either. There's definitely a place for this in everybody's portfolio, from people who make a working person's wage all the way up to the very wealthy. What would you say is a good call to action for our listeners this week? It's time for this week's call to action.
I think both of us have some content on this concept, and I think there's been a number of content creators out there that have content on this concept. So check out some of that on my YouTube channel or on James's. Also using this strategy as in how we do it. I mentioned earlier the Burr strategy. So I have specific videos walking through detailed numbers on executing this strategy. So on YouTube, at NetWealth Finance is where some of those videos are, but other creators have plenty of content on this as well.
We actually have content here on this podcast itself too. So revisit those earlier episodes where we've talked quite a bit about infinite banking itself. It comes up regularly here. definitely have some very detailed videos where the visual is very helpful. And I would say my call to action is to find a video on YouTube that has the visuals to go along with it. Because there's only so much that you're going to get in the podcast format with this. Sometimes you just need to see the numbers. And both Carlo and I have videos on our channel that do this very, very well. I would say on my channel, look up the video titled A Comprehensive Guide to Infinite Banking. It's about a 36-minute video, but it really goes in depth on pretty much everything you need to know, and it has really good visuals to help you understand it. So if there's something that you're not quite getting, maybe you need some good visuals on that, YouTube is going to be the place to go, I think. That's going to wrap up this week. Next week, we're talking more infinite banking. Is it just an insurance sales ploy? Or is it legit? We're going to kind of come at it from a different angle than we've talked about today. Because a lot of people like to say that this is a scam and it's just out to make the insurance agent rich. So we're going to unpack that debate in next week's episode. Be sure to join us. With that, my name is James Barber. I'm your Oregon Cash Flow Pro, and I'm licensed for life insurance and annuities across the country.
And my name is Carlo Viqueira. You can find me at netwealthfinance.com or on YouTube at netwealthfinance. And we'll work with life insurance clients across the country as well.
We'll see you next week.
Thanks for tuning in.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.